Hey traders, Nick here, looking at Harley Davidson. Ticker symbol is HOG, came recommended from Jake. Jake's thinking going short it via a debit put spread or debit puts, meaning I like it because it's a controlled way of taking a short in a company. They're going to report at the end of January sometime. Check the dates on that. I don't have the exact dates. So definitely no credit spreads for me. Um, if I look at the chart, this is a 1 year daily, and if I ignore this dip in October that went way too low, and we'll talk about that dip a little later, I can almost see a head and shoulder pattern like in spirit. You know, they ran and then they failed, they ran higher and then they failed, they tried to run as high but they failed, and now they're failing. Now we have higher lows and lower highs coming to a point which are going to resolve up or down. You can flip a coin, and I like down versus up. The only caveat there is that gas is low. People might feel rich. They may have spent the extra bucks on a couple hundred a month for a hog. Not sure. So if you believe markets are extended, that also works with the short. So here's the one thing I wanted to do. I wanted to zoom out to 2 years. And this tells me there was a reset in price in this period. They went from playing here, which is the early to mid 50s, to playing here, which is early to mid 60s, pretty quickly. I'm not sure why, but I'm sure of one thing is that when the you know what hit the fan in middle of October, they were so fast dropping to the old zone, which tells me that if they disappoint anywhere here, they're going to whoosh down to the old zone pretty quickly. So which level to short it at is up to the individual. I like paying up a little bit and buying close to the money. This way, if the wish comes, I only need to guess on direction and not magnitude of move. Meaning if I short it close to where it is right now when it does drop, I don't have to worry about how far it drops. Whereas if I guess it's going to drop and I guess and I buy something here really cheap to save money, what if it drops to here? I don't make much unless I have time on my side. So debit put spreads will be the play for me if I were to go in on HOG. I have not done it yet. And as far as a trade, I don't know what kind of premiums we have on there. And I would most likely include February. Because of January, I'm not sure the earnings are going to be there. So if I wanted to capture the earnings for this coming earnings, I would go out to February. And it looks like the marks are, if I buy like a 60 put naked, it'll be like around 90 cents or so. And if I buy a 57 and a half put, it'll be 50 cents. So it seems pretty cheap to just buy puts in the darn thing and just sit on them. I have not done it yet, but this is my opinion on HOG.